Hey traders, welcome back to the channel. It is Tuesday, January 20th, and this is the market movers report for the day. But before I get into the report, I just want to make a little side note observation. After what happened over the weekend, today is actually the first day in as long as I can remember that I didn't trade anything at all. Not a single contract traded today. Because after what I saw the SPY do over the weekend and knowing what the news is and all of the absolute chaos going on everywhere in the world, I just thought I'm staying out of it today. Because even though I had a thought in my head that maybe I might try to go short and get some put contracts, even that, I just wasn't comfortable enough with it to trade anything. So, I just stayed out completely today, which is extremely rare because honestly, I can't even remember the last time that I did not trade a single contract. So that's where we're at, and I always say that volatility can be very good. There are definitely conditions where volatility is good and you can use that in your favor. But for me, there was too much volatility today, so I didn't even want to get involved. I'll get involved when I feel like the level of craziness has been dialed down a little bit and I can sort of do a bit better job of predicting where the price action is going. Maybe that'll be tomorrow, maybe it'll be the next day, who knows? But it was just absolutely crazy this morning. So one other thing, another reason why if you're day trading, if you're primarily day trading, it's almost always a bad idea to hold over the weekend. Now there have been times where I have held over the weekend, but every time I've done that, it's been because I've seen a very, very specific thing that I was anticipating happening and a thing that I had a pretty high degree of confidence in. But if you're just sort of maybe I'll just hold over the weekend and see what happens, that's always a bad idea because you can see what happened over this weekend. And if you were holding SPY or Triple Q or pretty much any other stock, if you were holding call options, you just lost a ton of money over the weekend and you didn't even do anything. You just woke up this morning and you lost tons of value on those contracts. So that's just one reason why, unless you have a very, very specific idea in mind for holding contracts open over the weekend, just don't do that. All right, so let's get into the news now. Markets just wrapped up a brutal Tuesday session as Trump's tariff threats over Greenland sent stocks tumbling to their worst day since October of last year. The S&P 500 plunged 1.9% to close at 6,824. The Dow dropped 1.7% and the Nasdaq fell 1.9% to 25,042. All three major indices hit 4-week lows as geopolitical tensions rattled investors who returned from the MLK Day holiday. The sell-off was triggered by Trump's announcement that he'll impose 10% tariffs on 8 European countries starting February 1st, rising to 25% by June, unless Denmark agrees to sell Greenland to the United States. Denmark, Norway, Sweden, France, Germany, the UK, Netherlands, and Finland are all in the crosshairs. Yes, you just heard that correctly. European leaders called the move completely wrong and threatened retaliatory measures, with the EU preparing to activate its so-called trade bazooka worth up to $108 billion in counter tariffs on American products. Big tech and semiconductors got hammered. Nvidia sank 4.4%, Broadcom tumbled 5.4%, and Oracle dropped 5.8% as investors fled growth stocks. The VIX fear gauge spiked nearly 19% to 18.84, while Treasury yields jumped on reports that a Danish pension fund is cutting its exposure to U.S. Treasuries. Even safe haven gold surged 1.7% to 4,672 as investors sought shelter from the geopolitical storm. On the earnings front, 3M disappointed despite beating fourth quarter expectations. The stock crashed 7% after the company issued 2026 profit guidance that fell short of Wall Street estimates. Now, there's another thing I want to jump in and say. It seems like it's kind of repeating a pattern that we've seen a lot recently of earnings where a company will report better than expected earnings, and yet the next day the stock trades down. So if you just are thinking to yourself, well, if the stock beats the earnings estimate, that means I can go long in the very beginning of the day because the next day it's just gonna, pop all day long because they beat earnings. That is definitely not something that you can count on because we've seen that over and over in the last couple of months with plenty of names who have beat their earnings expectations and still traded lower the next day or the next few days. United Airlines beat expectations with fourth quarter adjusted earnings of $3.10 per share and record quarterly revenue of $15.4 billion, though the government shutdown cost them about $250 million. Netflix reported after the bell, beating with 325 million global subscribers and projecting a doubling of ad revenue in 2026. So what's happening now on the horizon? Traders are watching Wednesday's housing data. So tomorrow, the housing data. Housing starts and building permits, plus a packed earnings lineup including Johnson & Johnson and Charles Schwab. With tariff tensions escalating and the Fed expected to hold rates steady at its January 29th meeting, tomorrow's session could see continued volatility as markets digest this unprecedented standoff with America's NATO allies. So, if you traded today, I hope you had some good trades. As I said, I stayed out of it all day today. Maybe I'll be back in it tomorrow. Who knows? Just depends on what I'm seeing when I wake up, how everything looks tomorrow. But if you are going to trade, I would say be very conservative. Keep your sizes small. If you're going to trade at all, get in and out quickly. Take your profits when you get them. Don't think that you're just going to be able to let something run all day long. This is not the environment for that to happen. It's whipsaw, up and down, crazy action. So that's it for today. Until tomorrow, take care, everybody. See you soon.